Hi, I'm Brahm, and you're watching Buy and Hold Fundamentals, where you get to watch me look at 20 properties every single day. I do an initial, very shallow analysis to determine whether it's worth spending more time looking at them. So let's get started. Today, we're on our second day of looking at Carmel, Indiana. And as per usual, we start grabbing our data and sticking it in our analysis sheet. And as per usual, I stick it in the wrong place to start off with. We're keeping track of all of this information so that we can get a feel for the market, look at our accumulated knowledge of the market, and start drawing conclusions based on that data. Just go back and grab anything on taxes, 5 1/4. Okay. We're seeing $766.06. Oop, come on. Let's keep on going. As you'll have seen, I'm actually not looking at market rates yet. What I'm doing is assuming that there is a 1% rent ratio, meaning that 1% of the purchase price represents the price to monthly rent for the property. And that's not necessarily true. That depends on the markets. There's markets where that is, and there's markets where that isn't. But for an initial analysis, really shallow analysis, that's just fine. We'll just assume that the taxes stay the same, $843. And hold on, 6%. 3 and 6%. Okay. On to the next one. And so far, looking in the corner of Carmel that we have been looking at, it's mostly really new construction. Pretty pricey places. Not in the least bit convinced that if you were going to invest money into buy and hold properties, you'd want to spend your money here. It's so new that we don't have anything on taxes. We'll just assume the same. That's making $11.52 and 7%. Okay. It's all about the volumes. You just got to look at a lot of properties. Without looking at a lot of them, you're not going to find anything. And even if you're planning or you're expecting to not be able to find anything off of the MLS, you can still use it in order to learn a lot about a prospective market. If you're going to be spending thousands of dollars on an investment, you should be willing to invest a couple of hours churning through everything you can get. Let's just up that a bit. Taxes to $6,000 a year. You should be willing to invest the time needed in order to get some knowledge on a market that's based on you having gone through it rather than having someone else done it. Let's grab the price, stick that in there, and we'll just assume 1% into our analysis sheet. And there we go. 913, 6%. Okay, didn't get any tax info here. Did we have any? No. Didn't think so. There we go. Stick that in there. 800,000. Let's keep going. Come on. There we go. Turn that into 7,000 in taxes. Still making $1,000 and 6%. Okay. There we go. Now we're looking at something that's most definitely not new construction. I think that's much more likely where you're going to find things that are really interesting to invest in. Not be in this town, but 4,100 in taxes. Oh, what am I doing? There we go. Right. Stick in the price. Adjust the rent. Adjust the taxes. See what we get. 235, 3%. That's going to be a lot closer to reality, if you ask me. Let's see what we got here. Okay. And there we go. Grab that. Not like that. Stick that in there. I might as well call that 6,000. Let's see. Stick in the price. And let's see if we got anything on taxes, and we do 4,000. And we're making $922. 7%. Okay, next, finish that block. Let's keep on moving. More new construction. And back to our analysis sheet. Let's see if this has got any tax info. It's also too. Yep, there we go. Too new. Just leave that in place. 878 and 70%. Let's keep on going. interesting. It's showing up as not even being properly Carmel, but within the boundaries. I guess it's just some village that got absorbed in there, Zionsville. Here we go. And assume the rent. See if we got any taxes. Yep. 46. And $6.99, 6%. Okay. Next. Grab price. Stick that in there. And then assume the rent ratio. Go to the sheet and let's see if there's any tax info. Yep, 42, 577 and 5%. And we're off to the next one. Now we're off to the next one. That can go away. Okay, and grab the price. Stick it in. Assume the rent. It's like meditation. Just keep on doing the same thing. It sort of helps you to pay attention to new stuff without having to think about it. 4,100. What do we got? 562 and 6%. Starting to see a pattern here on the cash on cash. Remember that when we were looking at Fairlawn, we were getting about 1% to 2% when things were nominally cash flowing on our initial analysis, and now we're getting 6%, 6 to 7. What's changed? It's not really the prices of the properties, right? Because they're still fluctuating somewhere between 300 to close to $750,000. So that's not it. We're still assuming a 1% rent ratio and haven't checked the actual market rents yet. So that's not it either. What's the difference? It's the taxes. That's the big difference. 521 and 5%. Okay, let's keep going. Drop that in there and grab the price. Stick that in there. I didn't mean to do that yet. Hold on. Anything on taxes? Nope. I'm just going to assume that it stays the same. Okay. 411, 5%. keep on keeping on. Go back. Grab the price. Stick that in there. Just checking. They're brand new. Yeah, I'm not gonna get anything there. Okay. Enough mumbling to myself. This whole thing's gonna. We can keep the taxes like that. Probably gonna be lower. You know what? I'll make. Let's make that 3,500. Okay, 417, 5%. Next. Spring Manor. I'll mix up these places. There we go. And brand new construction, but it's there. Apparently not really selling though, because there's a shitload. They just finished. Let's see. It's literally just finished. I guess that's why. Let's see what this gives us. That's 1% rent ratio, taxes status, and 494, 5%. 494, 5%. Next, Bateman. Interesting thing is, these aren't even real houses. They're they're just there to show off particular models. But that's what's gone into the market, so let's see what we're getting out of this. Stick that can stay the same. 487, 5%. 487, 5%. It's good for our statistics. And show 3 more. There we go. Milan. Milan plan. There we go. Stick that in there. And 1% rent ratio. And there we go. $458, 5%. Okay, London. Okay. Why did nothing? Okay, yeah, because nothing came in because I didn't paste anything in, that's why. Okay. What are we getting? Stick that in there. 4,000. Okay. Oh. 471 and 5%. And on to the next one, Rome. When in Rome, get a cookie cutter house. I guess that's what they're saying. There we go. 400 in rent. Oh, don't need to go back there. Shoot. There we go. $498 and 5%. 498, 5%. Okay, well guys, we've looked at another 20 houses. I'm Brom, and you've been watching Buy and Hold Fundamentals. I'll be back tomorrow. See ya.